Hi traders, welcome to a video on trend definition using trend channels. My name is Chris, this is Elite Currency, and we're going to dive into part 4 of looking at all the angles of defining the trend. Before we do that though, be aware that this video is intended for a global audience here, but may not be suitable for everyone. Take a look at this risk disclaimer to find out more about that, and ask your financial advisor for more information as well. Regarding the risk involved with trading for exchange, they can be considered high. This video is for educational and informational purposes only and is not advice. And by continuing watching this video and webinar, you agree with this disclaimer and you're aware of the risk involved when trading. All right, thank you so much for your attention. So we're going to dive into trend channels today and how we can use that for defining the trend, of course. And defining the trend helps us trade with the trend when we want to. And if you're looking for reversals, then then of course you need an established trend as well to go against that, plus some divergence probably. So trend channels in general are very useful, I think, very good information because they give you the angle of price. They show where how far price is in that trend. Is it back to support or resistance? How much space is left? And trend channels just are very useful information. You can see here an example of a downtrend, obviously, because the channel is sloped to the downside. Price has multiple hits at the top, multiple hits at the bottom, and has some internal lines here as well that are respected. So that's kind of a couple of items that I think are important. A good angle. We don't want too steep or shallow. We want multiple hits. We want a price that respects the internal channel lines. Most of the price action we would like to have inside the channel, but sometimes, occasionally, a bit of price action outside is good as well. So let's talk about the details now of all of these, characteristics that I just talked about. Let's first start about the angle. A trend channel is supposed to have an angle something like what you see here. This is a good angle. The brown trend line is indicating a balanced move down because price is basically moving in a rhythm where you can see some good strength to the downside in this downtrend and some correction basically to the upside or sideways when price is not trending. This is the natural basically rhythm of the trending market. Price tends to do this. Impulse correction, and that's why we get a channel like this. Both the impulse and the correction part are important elements of a trend so that you get a natural continuation and a natural retracement, and this makes the trend channel sustainable. Now if a trend channel is too steep, like this green line, you can see that that's a pretty steep angle, then this is not sustainable. The steeper, the less sustainable it is. Price can keep moving strongly with that momentum for a while, but eventually it's going to lose its steam and it's going to make a bigger correction. It needs to make a bigger correction and kind of regain its pause, and it has to kind of make a correction so that price can breathe again for perhaps a new trend continuation. That correction will break the channel because the channel is so steep. Take a look at these green lines, a lot steeper than the brown lines. That green line eventually breaks. You see price correcting by breaking through the green channel and then still continuing with the trend later on within the more shallower, more stable trend channel, the brown lines. So that's typical for a too steep channel. Sideways zones, of course, when the channel is flat, in that case, you will see price basically not having any angle. Those are not trends. Those are ranges, corrections. When we have lines that have no angle, clearly no trend channel. But if the channels is too shallow, then that's a correction as well, a sign of correction. And basically, that's showing that there's not sufficient momentum in the direction of the trend. And in that case, a weak angle just shows a corrective pattern. In this case, perhaps a rising wedge with the purple ones there. So that is not a trend. Now, how do we mark good and shallow angles? That's something we'll talk about in about 20 seconds from now. Just want to refer to Admiral Markets. If you're interested in opening up an account with Admiral Markets through us, you got great advantages. You'll get credit for our educational services depending on how much you trade, the volume basically. And you also get our free moving average course. It's valued at €890, but if you join through us, then you get it for free. So 2 good reasons: you get the course, and you get also credit back for our website, on your volume. So that's very useful. So let's talk a bit about the angle itself. The angle should be around 30 to 45 degrees. That's an optimal angle for a trend channel. Anything below 30 degrees is a shallow channel. Anything more than 45 degrees is typically considered a steep channel. Steeper and shallow channels are still useful and still provide information, but I do not consider them trend channels. I just talk about channels in that case. If it's a trend channel, I'm specifically referring to a 30 to 45 degree angle. And when I'm measuring that angle, then I'm talking about a chart that is showing roughly 150, 200 candles, not a chart that is only showing 20 candles, because then we're zoomed in way too much. All right, let's move on to multiple hits. How many hits do you need before a channel is basically considered a trend channel? Well, the answer is 4, and anything lower than 4 is considered a potential channel, and anything more than 4 only means that the channel is more established and has more value. If a channel has 10 hits, 10 times price is hitting that channel, then it's a very established channel, the market is respecting it, and it has a lot of value. Now, basically in a downtrend channel, first of all, we need 3 hits on the top. 1, 2, 3. At that point, that is a confirmed downtrend channel, and we have a 3rd hit on the top for a downtrend, and we have 1 hit on the bottom as well. For an uptrend, of course, that would be 3 hits on the bottom. It's the opposite, and 1 hit preferably on the top. Then we have a confirmed down and uptrend channel. Now, there's nothing wrong with drawing multiple channels as long as they're relevant for our analysis. And often enough, price is going to respect multiple trend levels and channels. And sooner or later, one of these is going to become less important, and we might decide to delete them when they become obsolete and remove those channels. So there's nothing wrong with keeping a couple of channels as long as it's relevant and you think that it's valuable for your analysis. You don't have to have only 1 channel, and in fact, sometimes it's very useful to have 2, maybe even 3 sometimes, on multiple time frames as well. Now, when is a hit really a hit? Obviously, when price is touching the channel, but even if it's within 30 pips or so from the bottom or top, on a 4-hour daily chart, I would consider that a hit. So even though I've moved this bottom a bit lower to connect these bottoms a bit better, I consider that a hit because it's within 30 pips. So if it's close enough, it still counts. Let's talk a bit more about internal channel lines. In fact, there are not only the top and bottom lines, but you can also place 3 lines between them, basically a middle line and quarter lines, which are in between the middle and the top and the middle and the bottom. What these do basically is just represent an idea of where price is within that channel. Within a downtrend channel, the top half, that means this part, I'm going to draw their red lines here, right? These 2 parts, basically, that's the top half. That's the best for shorting in this downtrend channel because price has made a retracement. Whereas shorting in the bottom quarter, as you can see here, is not so good because then there's a potential of selling into support because we're at the bottom of the channel. And as you can see, that would not have been that good in these spots, except maybe here, the 3rd green arrow there, first green arrow, sorry, the 3rd green circle. That could have been an exception, but you see most of the time that the bottom of the channel is not a good area to look for shorts. So within the downtrend channel, the top quarter is the best, the top half is good, and the bottom quarter is the least interesting. The middle line often enough acts as a support and resistance as well, and is typically well respected when the price is basically around that level. You should expect that to have some importance on average. So when you have a middle line in the channel, you want to see that price is respecting that that middle line, because then you know that your channel is indeed a proper channel. If the middle line is respected, that's a confirmation that the channel you have on the chart is a good channel. Whereas if you have an uptrend channel, obviously it will be the opposite. The bottom half is great spots for buying. The upper quarter is not so good for buying because we're there, of course, going along right in front of resistance. All right, there's also a question of price action versus the channel. Basically, I already talked about the fact that most of the price should be in the channel, but sometimes we can have price going through the channel a bit. And that's called overthrow and underthrow. And here you can see in the downtrend channel an example of an overthrow. Price is accelerated a bit above the channel, and that can happen. Just because price breaks the channel by a bit doesn't mean the channel is broken immediately. It could be just an over or underthrow, and that's why we have to wait and see. And it's better to be a bit cautious. There are two types of breaks. Breaks that go against the trend, and those could be bigger corrections or reversals, or breaks that go with the trend, like this example on the pound USD daily. Price actually breaking below the downtrend channel, accelerating the channel, causing actually price to show more momentum in the downtrend in the bearish direction by breaking through the bottom of the channel and just really accelerating away from it, as you can see. So this is very interesting, of course, for with the trend setups. As you can see, price can then really have a big momentum. Whereas if it breaks through the resistance here, then that, of course, would have been a reversal trade. Now, I don't trade the breaks of big channels immediately. I want to see how price responds to these channel lines. Is there, for instance, only a bit of wick outside of the channel, or only part of the candle out of the channel? Then that's not a strong break. A strong break is either 2-3 candles fully outside of the channel, and in this case you can see 1-2 candles somewhere in here. We got 2-3 candles outside of that channel where the blue circle is. I'll add an arrow there. Well, that's of course already a strong signal that the channel is breaking. Another method could be to wait for a higher high, a higher low or a lower high. In this case, let's say price would have hooked back. It didn't. Let's say it did, and we would have gotten a lower high here. Well, that lower high would have been a confirmation of the break as well. Or if price would have broken to the upside here and hooked back, then the higher low would have been a confirmation of the upside break, right? So those are important. Now, in this case, we didn't get it, and that's why I said keep an eye on 2-3 candles outside of the channel as well, because that's kind of a backup solution. All right, so that's basically the over and underthrow, and sometimes you'll get the extension through that channel. So that wraps up our info on trend channels. If you're interested in a strategy, accurate pivot points, uses moving averages, a multiple time frame indicator for lower time frame trading, and some other great rules and strategies, take a look at this link, and don't miss the €500 discount that's still valid for the next 10 days. And well, I hope that you join this accurate pivot point strategy, and wish you good trading, good hunting, and talk to you soon. Cheers.